Counseling, Cynthia DeLuca. Good morning, Cynthia.
Good morning.
Cynthia is with BB&T in Chapel Hill, North Carolina. Does anywhere from $4 to $5 million a month. And let me ask you, before we get started, how did you get into the business, and how many years ago?
I started right out of college working for a bank in North Carolina that has eventually become a really big bank, and have done everything there.
This is BB&T?
No, this was another bank.
Mm-hmm.
And my last job there was I managed a very large branch of that bank, and did lending and managed people, and hated managing people, and ended up...
You'd rather make the money.
Well, it was really just did not like what I was doing,
mm-hmm.
and but I liked my customers, and I liked the lending side of it, so made the jump just to be a lender, and have really enjoyed that part of it, because it has an end. You complete the loan, and then you have the relationship, but you don't continually have to manage someone on a day-to-day basis.
Well, when did you get out of management and become just a pure loan officer?
1992, 8 years ago.
Okay, and before that you were in management for how long?
Probably 10 years.
Mm-hmm. So you had a pretty good background when you
mm-hmm.
really got into pure origination.
Right.
And when did you end up working for BB&T?
In 92.
Okay, which I remember as a very, you and I talked about, it's a very, very small bank many years ago.
Right.
And really enjoyed enormous growth, even up in the Washington metropolitan corridor right now.
That's right.
So they, want to be a major regional player, and they are.
Mm-hmm.
Well, let me ask you, when you started off doing your business, what were you focusing on? Was it realtors or builders, or?
We had, this is a very competitive market, just like all markets are, I guess, but because of the university, North Carolina is located here, we have a lot of people coming and going all the time, so you are very dependent on realtor referrals, but that is very hard to reach those people because a lot of those folks have their contacts already lined up. We had a very, very good construction perm product. It was the best in the market, and I decided that rather than try to focus on, every ARM product, every FHA product, and everything else, I would focus on construction perm lending and become very knowledgeable and the best person that I could become with using that product. Started using the bank contacts to call on builders. Now, that's not to say it was just their builders, because this was a very small branch. We had less than, we were like 10th in market share when I came here, but we did know some people through that, and I kind of used that as a springboard, and teamed up with a very good retail loan officer, someone who did lot loans. And as a team, we would go out and talk to builders about people who might be looking to build a house, and just use that as a springboard, I guess, to sort of get to know the builders. And then from that, you get to know the realtors that represent the builders, and just try to give them good service and pay those builders some attention.
This is a bit unusual. I like that from the get-go. As I told you, everybody's got a different tale to tell, even those that do the same sort of thing. And I've talked to quite a few people that do construction perms, or perms working with builders, getting the end loans. But this is an unusual start on how to do business by going directly to lot owners to get to the builders. You may not think so, but I interview a lot of people, and it is. Were you successful from the start?
Yes, because I had, and I give all the credit to, I had a very, very good retail loan officer. I always felt like if we could get together, if she and I could talk to the customer and then talk to the builder, no one else had any chance to get that loan, because we treated the customer well. We also treated the builder well. And it wasn't that we had the best pricing in the world on those lot loans, but we made it really easy for the customer. Once they applied and got their lot squared away, then we just kept copies of those lot applications, and when the customer was ready to build in a year, they didn't have to reapply. We just took that application, and I would update it on the phone and make it very easy for the customer to turn that into their construction perm loan.
But what intrigues me here is the issue of just how you got these people, because in the normal mortgage process, as you know, if you're dealing with builders, you go direct to a builder. If you're dealing with realtors, you go to the realtors. CPAs the same way. But this is a bit unusual. This is almost like going consumer direct from the get-go, which I think is, at least initially, a lot harder. And, of course, that begs the question, how did you find these people and what attracted them?
There was a very large subdivision that was built south of Chapel Hill. It's an upscale resort golf course community. And we became friendly with some of the salespeople there. And those salespeople were the best people in the world at selling dirt. They sold a lot of dirt, and it was sort of selling the dream of this resort community before it was built. So they would give us the names of the people that they were talking to, so that we could talk to them about how easy it would be to get their lot and subsequently to build. So we were trying to make ourselves part of that process. And we called on those agents every week, but we called on them together. And we would go out there and say, okay, who are you talking to, and can we talk to them, and that sort of stuff.
Excellent.
And,
I'm loving this.
We were there every Friday, and it sounds really corny, but if we didn't show up, they wondered where we were. We were there every Friday.
That's interesting, because most people that, and believe it or not, I sold dirt when I was young for a short period of time. I know all about it and how the process works and what a line is and ups and point man and the whole, and TOs and everything like that. So I understand that business, and I find that really fascinating. As our listeners, some of them know, some don't know, most people that tour will tour on Friday, Saturday, and Sundays, either using a letter program or some other form to get them down. But when these people came down, they would give you the names of the people, whether they had bought or not.
Right. And a lot of times we would send them, we would not send them, but we prepared a bunch of packages that were sort of welcome to the area packages, but they were specifically aimed at people who were buying lots, and about how, again, stressing how easy we could make it for them. And we prepared these packages. It seemed like we prepared like 100 every 2 weeks. It was just an enormous amount of stuffing going on of these little folders. But they would mail these to everyone who even remotely was interested. They made our package part of their package. And so naturally, when the time came and they did buy the lot, they would at least give us a shot at talking to them.
Right. What I find out, what was the name of the development?
It was Governor's Club at Chapel Hill.
Mm-hmm. And did they, I'm assuming at that time they did not have their own source of financing? A lot of the developments, that vacation land were owned by the banks or people that had their financing in place. No.
They had their own development loan, obviously, but they did not have, they had some relationships with other banks, and the difference was that there were other banks who were calling and also had this information available, but we were very consistent. We went out there a lot, and we just showed up all the time.
Well, they say in this business that there's nothing more value than persistence.
Well, that's right.
And, showing up there all the time, I'm sure, had an impact. Your partner, did she specialize in something that you didn't do? You said you acted as a team. What was her expertise?
She did only lot financing, and then she also did what we call retail products. She did the lot financing, and when the houses did get built and we did the mortgages, she did the equity lines. So she did not do the mortgage or the construction perm loans. She only did,
the lot
based lending. Mm-hmm.
Mm-hmm. And what kind of interest rates or what kind of terms were you said you had? Were doing something that was not that special, but nonetheless was attractive. What kind of terms were you offering at the time?
I don't remember the rates because obviously they've gone up and down, but we did 90% financing on lot loans.
That's good.
And it was very aggressive, but it was really. We did that to match what another local bank was doing. It wasn't that we were the leader in that. Right.
And, of course, that's probably, I'm guessing that's a portfolio product, too.
It was.
Which helps you in terms of underwriting and doing deals like that. I would also think, too, that doing it that way, you probably picked up some loans where people bought lots in different subdivisions, that they were visiting others and had your name?
Rarely did that occur at that moment, but that was later and down the road. A lot of those people, most of the people that saw that property and were going to buy in this area did buy there. It was, it's very attractive, and it was always very well done, and just a beautiful environment out there. Kind
of like Pinehurst, where it's a kind of a destination area.
Yeah,
then.
It's just beautiful in there. But what happened with those people was once they did become customers of the bank. Of course, they remembered me, even though they did not. I didn't see them on a daily basis. But later, those people bought second homes, and their children bought homes and stuff like that. So I became, they remembered me, and I had asked them if they did build or buy another home, that they would refer back to me.
How did they remember you?
Well,
what did you do to ensure that?
One of the things that is good about it's our company. It's nothing I did, but we keep our mortgage people in the branch. So even though they may not come to me to order checks, they can see me and they know that I'm here. And if I'm passing through the lobby or whatever, they would know that I'm here. And I have a mailing list and would send notes occasionally and that sort of stuff. But it wasn't as good as it is now. I continue to sort of modify that, but part of it is just being visible and being where they can see me and remember me.
Did you branch out from there?
Yes. This resort community had a preferred list of builders. They were extremely selective about who built in that community because obviously they did not want. They wanted to maintain the level of excellence that they had out there. And I worked very closely. Once they got their lots, and I would work with a builder on one house, I would ask them for referrals and try to make it as easy as possible for the builders, but still protecting the customer's interest during the construction process. And a lot of banks do not do that. They make it extremely difficult for the builder to get their money. And the fact that I am local and the fact that we sort of focused on the end result of we wanted the next deal. We didn't just want this lot and this house. We wanted all of those referrals from that builder. Later in the process, my great retail loan officer got married and moved away. And the lot loan gravy train stopped because her replacement, while very good, it just was not the same. So what had happened by then, though, was that the builders, who they had their lot loan with, ceased to be an issue because the builders were so loyal at that point that they would send their clients to me. So they could have their lot loan with any other bank, and it mattered not.
That's interesting. How many builders did you end up having a relationship with?
I probably have 10 to 15 builders that have a very short list of people they refer to, and I'm probably, at least at the top of that list or maybe second on that list. So, and they're very high-end homes, which helps a lot.
So they do numbers.
Mm-hmm.
What do you find for our listeners out there that are entertaining getting into the it's kind of called generically the new homes business or builder business? What kind of advice do you have for them in dealing with builders? And I say that because builders are a breed apart from realtors, and they have different personalities and different wants and needs. And I wondered if you articulate that a little bit.
Well. One of the key things is, again, to be able to get the draws to the builder quickly if you are doing that for construction perm loans. And even if someone else is doing the inspections and someone else is making the draws, if you can set it up on a system and they know what their expectation is, they will comply. For example, if you say, if they're going to want to draw on Friday, you tell the builder, if you'll fax your draws to me every Tuesday, then I will make sure you have the money by Friday. If you make it easy for them, you will improve their life, and therefore they are more willing to send people to you. But builders prefer not. My experience is builders prefer not to deal with the financing. They don't want to know about it. They just want to know when they can get their money. Realtors are much more controlled in terms of, or controlling in that they want to know every detail about the financing a lot of times. You know, they want to make sure that if they send that person to you, that they get the absolute best rate that's in the marketplace, which may not always be the case. I mean, you know, depending on what the rate structure is. Builders are just concerned about making sure that when we get to the end of the process that they're going to get paid. And it's a little bit different.
Yes, it's almost at the other end of the spectrum,
yeah,
really.
They don't want to know the details as much, and I think they prefer not to know the details.
I think there's something else interesting, too, we can extrapolate from your comment, and that is builders, now I'm not saying that the customer themselves are not concerned with getting the best rate, but builders are not that rate sensitive to a degree. They don't want to see somebody hammered, but you're right, they have a different agenda, and their agenda is getting off that construction loan and getting their draw money as fast as possible.
Right.
And that is different from the customer needs.
That's right.
So your builders are more, I put words in your mouth, but the builders are more service oriented and not as price conscious.
That's right. And a lot of the folks that I deal with are moving here from other places. So my consumer clients are also extremely service conscious. I mean, they need to know what they need to give me, and they want it done. They don't want a million calls back and forth. They just want it taken care of so that the house can get underway.
When you're doing some of this, and a builder calls you and gives you someone that they're contracted to buy a home, what kind of process do you go through initially? And by that I mean, do you go right to a pre-approval as opposed to a pre-qual process?
Not really. And I've never really thought about that, but maybe I should sometimes. But what I usually do, particularly on construction perm products, is I call and I talk about us. You know, I talk about how our system will work, how we work with the builder, sort of the big picture sort of thing, that this is how we can get to the end of your building process. And by now, which I didn't have 8 years ago, but by now I have a huge amount of experience. So I talk about usually how I've either worked with this builder a lot or I've worked in this community a lot, and in other words, I know what I'm doing. And I really just talk about how it would work. And a lot of times we really don't talk about whether the person can afford the house until much later. But because of the type of people that that are building, most people who are building, it's not their first home. They know what they can afford. It's just a little different. It's not like someone who sees a house driving by and says, "Oh, I like it, can I buy it?" It's not that way.
Do you have do you have support and then once again, we don't want to know anything that's proprietary to your company, but do you have people that help you with plans and specs and as far as the back office support?
We have a construction lending department that handles sort of the back side, but it's transparent to the customer. The customer is not aware of that. They never talk to those people. They only talk to me.
When that customer comes to you, you're doing a construction perm. What is the process that these people go through, and how long does it take before they're actually going to settlement? Assuming a home, let's say, takes 6 months from 120 to 180 days start to finish.
A lot of it depends on the builders and where they are in the process. If they are just buying their lot, then it's usually a much longer process. But let's say someone already has a lot, they've lined up their builder, and the builder has sent them to me, and they have their architect and all that stuff lined up. Usually what I do is give them a couple different scenarios of products that we offer now, because over time our product line on construction firms has expanded. So I give them those options. And then I usually just give them a list of the documents that I think we'll need, and sort of give them the broad brush what they want their loan amount to be and how it would work. Then they typically send me that information without an application, and we create an application on the phone. Then once they close.
Okay, how long does that take usually?
It depends on, one of the things that's a holdup a lot of times are getting the plans and the contract with the builder, because high-end homes take a long time for the builder to price, and it can be, for example, I have one right now that I took in January that we're trying to close May 31st, but I just got the contract on Friday, which means that, I've got to get an appraisal and all this stuff done now within a short period of time. Even though the application's been in process a long time, we didn't have the piece about the house. The borrower's been approved for some time.
For our listeners out there that aren't in this business, what exactly do you mean by getting an appraisal? Because there's no home built. They're doing it right off the plans.
Right. They take the plans and specifications for the house, whether it's hardwood floors or carpet or a 40-year roof or, a slate roof or whatever, and they compare that house as it will be to 3 houses that have sold in the past year. It's not an exact science, because you're really talking about a house that won't exist for 10 to 12 months compared against houses that have sold, 8 to 10 months ago. So you're looking at an 18-month swing in property values, but it's the only system we have. And particularly on custom homes, it doesn't always work, but we do the best we can.
What kind of loan-to-values? What's the best loan-to-value then you can offer? Do you find you're more conservative?
No, I think we have a very aggressive construction firm product. We make it easy for the people in terms of if their existing house hasn't sold, we can do, sometimes 95% financing on a construction firm product.
And then you do a bridge loan?
We do not do a bridge loan. Typically, if they have 5% of their own money, they can put into it, and that may be the lot. They may have paid cash for the lot or whatever. But we will fund the loan up to 95%. Then, when the other people sell when they sell their existing home, they can pay their loan down before it turns into a final mortgage.
So, what if they don't sell their home? Is what I'm saying here.
Well, we assume it will be sold.
You do, and for the most part, well, of course, in this market, for the most part, that's exactly what happens.
That has really not been much of an issue in the 90s. Now, I don't know going forward in the coming years.
If you ever worked in the 70s and some of the 80s, let me tell you, there's a lot of builders got stuck, when the people couldn't, get their funds out.
Yeah. Well, and that's the beauty of this, in that the builder is not the one that's stuck, because the borrower already owns the home. So, you do have to have a strong borrower that can cover 2 mortgage payments for.
Well, that's exactly where I'm heading. Tell me about the underwriting process for these type of loans, with that in mind.
Well, up to, of course, 250 to 700, which is the conforming limit or jumbo limit. We underwrite using automated underwriting now. Loan Prospector for Freddie Mac is what we use primarily. Above that, if you have someone who is a jumbo customer and there is I guess we like to see some strong assets, meaning there's some capacity in the event that both houses don't sell.
Are you when you're doing your ratios, are you factoring their payment in as a debt on the back end?
Their existing home payment, we do not.
You do not?
We do not.
Okay. So
it's still out there, and I remind people it's still out there, but we do not figure it in.
Mm-hmm. That's interesting, because they're saving a lot of money by not having to get a bridge loan.
That's right. And actually, a bridge loan, the pricing on a bridge loan is typically significantly higher than the pricing on a construction firm loan, so they save money too with the just the lower rate.
Right, plus the points too, which raises the internal rate of return on those things sometimes to astronomical.
That's right.
If you're paying 3 points and you're borrowing something for 6 months, I'm not even sure a 12C can figure out the internal rate of return on some of those things. They get very, very high. Let's turn to the customers. How do you maintain relationships with your customers? You seem to indicate you don't do face-to-face interviews.
Not as much as I used to. I do some, and the biggest thing is, and this is part of our bank's goal, but it also is part of my goal, is I want the customer, when they move here, I want them to bank with our bank. We have a wonderful banking franchise. If they have their mortgage with us, they get basically all of their banking services free. So I really encourage my borrowers to bank with us. And if they're moving here, they have to have a new bank anyway most times. So I strongly encourage that. And that helps a lot, because even though I may not see them on a daily basis after that, they're still seeing the customer service reps and all those people their offices are right outside of mine. So I use the bank franchise to tie them to me. Now, it doesn't always work, and that's probably an area that I could improve a lot, but I use the bank franchise as much as I can.
I know somebody from Bank of America, and he does the same thing, where he's cross-selling and using the strength of the bank to improve the overall relationship, with that buyer.
Right.
What are some things? I want to go back to the builder side for a little bit, and I want to see if we can. You can help me jump inside their heads. Builders, do you find them easy to work with, difficult as a group? Are there areas that you really got to pay attention to? For example, you mentioned construction draws, which for a builder is, their mantra, getting paid on time. But where are the personalities, do you think, a little bit quirky and different from dealing with realtors or CPAs or other types of venues to bring in business?
Well, I think you have to obviously have one of respect, that you understand what their concerns are and their and their needs are. And also the fact that they, as I said earlier, don't want to really be involved in the details of something. But every now and then, well, obviously I review all the draw sheets before any draws are made to the customer, which is a huge amount of time, but it really does help to know what's going on with the house. Even if someone else has done the inspection, an appraiser's done it or whatever, I still like to review it, because the longer you do this, you sort of get a feel for how the house should be progressing and how often the builder should be calling for draws and all that stuff. And the more you really understand about who you're dealing with, the better you can protect your customer and the bank and the relationship, and sort of be on top of it. For example, if all of a sudden the windows and doors were delivered before the outside siding was put on in the order of the construction, that's a red flag. It needs to stay in a certain order, and as long as you're aware of that order, you can tell the builder, what's going on, why is this happening. And the more knowledgeable you are, the builder will respect what you're doing and therefore try to stay on top of things too.
Do you know you're the first person that I've interviewed that dealt with builders that actually reviews the construction sheets? I think that's fabulous.
Well, it's very time-consuming, but on the other hand, it is, as I always say, I live by the sword and I die by the sword. I have to have those builders. I have to have those relationships, and if I want to make sure that I am protecting the customer and I'm protecting the bank, but I also want to make sure that the builder gets what he needs quickly.
Well, when you see signs, as you say, signs of trouble or red flags when deliveries come out, does that create a problem where you have a builder maybe that is trying to get too much money up front in the process?
Very rarely. I mean, most of the people in this area are very honest and just want to continue to be successful and that sort of stuff. But from time to time, you do have some problems. And a lot of times I will call the customer and say, it is the customer's house. Remember, they own the house. Typically, these customers are, very savvy about what's going on, but I will call the customer and say, now, this is your loan. I can advance the money, but let me tell you that, this is kind of unusual. And typically that's all you have to say.
Sure.
The customer then gets with the builder and says, why are you doing this way or whatever. And from time to time, it's not to say you don't ever have problem loans with this type of loans. And that can be a real, 3 o'clock in the morning, wake up worried about a loan situation.
I've had a couple examples of problems that can crop up in this business.
I had a situation where just a very, very small builder. He only builds 1 or 2 houses at a time. He's very high attention to detail, but he's just not real good with the financial detail. And he had a foundation that was put in on the house, this guy that had worked for him for years, and then the subcontractor foundation person died. And his widow could not make head or tails out of the foundation person's estate, so she filed a lien against this builder on the house that we were building, and it just created a tempest in a teacup, because then we had to make sure every bill had been paid and so on and so forth. We had to set up an escrow account, so it can be very murky at times.
When we're talking about things like mechanics liens and getting release of liens, I wonder if you go into that a little bit. A lot of our listeners out there really do not understand, what you're talking about here, but it's important.
Yeah, anyone who works on a house has a claim against that house in terms of making sure that they've been paid for the work that they did.
And a priority claim, too.
That's right. So it's important that the general contractor pay everybody and pay them as they, promptly and whatever as they should be. What can happen is, disputes are typically the one that it's not necessarily failure to pay, it's a dispute over quality of work. And a lot of times they'll try to suck the homeowner and suck the bank into the dispute, and I am adamant I will not get sucked into that. We never pay subcontractors, never. And
but what happens if they have a lien that has a priority lien?
They have to perfect that lien in North Carolina, at least. They can file it, but they have to prove their side of the case.
And time period on that? Is there a time period in your state on that?
I think it's either 90 or 120 days.
Okay.
I'm not sure about that. But these disputes can be very difficult to resolve. But
have you ever had one prevent people from moving in?
No, I have not. And that's a lot of times once the subcontractor finds out that the bank is not going to pay them, and the borrower, I advise the borrower to get a lawyer, get their lawyer involved, but not to pay them until the lawyer tells them that they should. Usually the dispute somehow goes away.
Mm-hmm. Yeah.
but not always.
Well, you know how it is, and it's like in insurance, you're always looking to sue the fattest party.
Well, that's right, and it's not to say that we don't know who's right and who's wrong, but we're not in a position to judge either. So, but we do, back on the liens. I've done a ton of these loans, and we have very few problems with that. Just less than 1%. I mean, very, very small. But I also recommend if my mother were building a house for me, I would demand a lien waiver when the house was completed.
Right, absolutely.
It protects the borrower against someone saying that they didn't get paid when maybe they did. But it's just it's another form that you need to get. And I recommend that their lawyer obtain that for them.
And also, this is where you bring value added to the table, which is what I'm concerned with in this interview. That this is an area where you bring value added to the table with respect to the customer and also to the builder. Right,
and that is something that has just come over time. That's not something that you sort of have to learn that by doing it, but also. Having been in banking, just general banking, a long time, there's a lot of procedures that the bank has that sometimes seem really stupid, but those procedures protect you and your customer. So if you follow the procedures, but in a nice way, then you will, you should be able to escape unscathed from any problem.
Yeah, right. Do you find that in your relationships with your builders, do you try, and there's two schools of thought here, not advocating one or the other, or even taking a position. Do you find that you have developed personal relationships with builders that works best, or do you keep it purely professional? And as I say, don't have a position on it. I get two different types.
Occasionally, I will entertain builders in some way, like go to a hockey game or something like that. But not really. I don't really have a personal relationship with them.
So you try and keep it?
It's not really that I try to keep it. It's just sort of something that works out that way. Just busy life or whatever. But like I say, occasionally we do more client entertainment, but not necessarily personal relationship.
How do you manage your time with the kind of volume that you do, and also knowing that the types of loans that you do are very complicated and take more time than a normal, 80% loan-to-value purchase money type deal on a used home? Obviously, there's a lot of demands on your time. So how do you manage your time?
Well, my office always is like in a tizzy because I always have paper everywhere. But what I usually try to do is all day talk to the people who call or come in or whatever, and I just try not to even deal with the paperwork until after 5 o'clock.
Okay.
So now, if it's quiet, or it's a Thursday afternoon, and all the home buyers from the previous weekend or home shoppers or whatever have been pre-qualified or whatever, that's typically when I do a lot of the paperwork of reviewing stuff, and I'm sure my processors hate that because they don't get the stuff maybe as promptly as they would like, but I really try to return the phone calls and, all that stuff during the day and be accessible. For me, being accessible is one of the most important things, and I'm not as accessible as people would like. No one ever is. But
and yet, when I call you, we chatted a couple of times. I never have. I mean, you pick that phone up right away.
Well, if I'm not on the phone, I will pick it up. It's not like I'm sitting here reviewing documents trying to get something done, unless it's truly an emergency or we've got to get something done right then. But I try to save all that for later in the day. During '98 and '99, when things were frenetic, I came in really early. I would get here, well, maybe that's not really early for some people, but I would get here about 7:30 or 7:45, and that was really the best time to sort of set out what I wanted to get accomplished during the day. But a lot of stuff goes home with the paper, just sorting the paperwork out.
Mm-hmm. Do you have any sort of a family life? I mean, do you work weekends? Do you set aside? I talk to loan officers that set aside Wednesdays and Thursdays as date night. You get all sorts of different responses to this question.
I have a very active daughter who has a lot of after-school activities that other people drive her to, and it sounds kind of crazy, but she doesn't get finished with all of her dancing and cheering and all that stuff until about 7:30. So I'm there at 7:30 though, and I don't like to be any later than that. This year that hasn't been a problem because volume is down so much, but usually in the afternoons I usually stay late, but I don't like to work on the weekends because it is the only time I have with my family.
I see. Do you find that that you do at times get called on weekends, especially
I
on
don't
site?
mind. I really, for example, if someone is moving here and the only time they're coming is on a weekend, and the realtor or builder or whoever is, saying, can we have them call you? Of course, that's fine. But just to come in and move paper around, I'm not going to do it.
Mm-hmm.
And that's a trap. You kind of fall into coming into the office, and then you really don't get anything done.
Right, exactly. What about some of the builders that you have? I'm sure have just normal subdivisions where they have model homes.
Not really.
Okay.
It's very now. There is a community or a town that's about 20 miles from here called Cary that has a model home for every subdivision. But there are very few model homes in Chapel Hill, and I don't know why. They don't have that. A lot of stuff is custom or pre-sales without that model. Which is
a very different market area. If you came up to the Washington metropolitan area, it's just the opposite.
It's in fact, I've always wondered why we don't, but we just don't have that many. I mean, there's some, but very few.
Well, that also means you probably don't get a lot of calls on the weekends, too, which is a little bit different. What about, do you keep a voicemail page, or what kind of communications tools do you use and as far as software for doing your loans?
Unfortunately, I'm probably bicycling through the space age, but I don't have a pager.
You don't have you're the first one. Congratulations.
I do have one, but I don't like to use it. I would rather, I drive everybody crazy checking voicemail. I mean, if you're driving down the road, I'm checking the voicemail. But it's really, the pager, when I page someone, I expect them to call me back right then.
That's
and a lot of times you can't call somebody back right then. I mean, if you're with another client, you can't do it. And I think a pager sets up some unrealistic expectation that you will call that person back within 5 minutes. And I can't promise that I will do that, but I also try to be accessible and return phone calls as quickly as I can.
Do you think that giving a high service level like that to both builders and customers is in your prioritization? Does that rank way up there?
Yeah, I drive myself crazy with it because I keep a log of every phone call I have with their phone number, and if for some reason, I accidentally forget that log somewhere,
you're in trouble.
I'm in a tizzy. I mean, I'm just like crazy. But if I mean to take it home so I can call people from home, then, and I leave it at the office, I get real agitated with myself. But I try to call people back within an hour if I can. Obviously, if I have an hour application, that's not going to work. But I try to call people back within an hour.
And that's your general rule.
Mm-hmm.
Yeah.
In 98 and 99, it was not an hour. It was much different. But, that was a big refi boom.
Yeah, right, exactly. And I'm not sure we're going to see the way some of the notes and loans are being structured today and what's coming on the agenda, where you're going to have refis that are kind of self-fulfilling that automatically get recast at some point. You're going to see more and more of those, and there's people in the industry that feel that we're never, within another 4 to 5 years, we're never going to have another refi boom of the scope of the ones that we've seen in the last 6 or 7 years.
I don't know. I think the consumer thinks that we will, because it's amazing to me right now when people are locking into an 8.5 rate that they say, well, I can always refinance. I'm going, well, you can, but remember, this is probably going to be your rate for some time. But the customer seems to have this expectation that they will refinance it in a couple of years.
Right. That's just because of history.
Mm-hmm.
If anybody went through the Jimmy Carter era, knows full well that, when the VA rate got up to like 18% and like 14 points because he didn't want to have to go anywhere near 20%, they thought they would lose the election, which they would have if they ever had to do that. Anybody's been through one of those, that's a real experience, I'll tell you. Let me ask you something. Do you do 100% of your business the way we've been talking today, or do you pick up little pieces of realtor or CPA or other venues?
It's probably, I'd say right now it's probably 40% of my business. It's the other is I do get a lot of referrals from my existing clients. I ask them for referrals.
How do you do that?
Well, I usually do it at the time of application, or when the loan closes. If you have someone else, please send them to me. That sort of stuff.
Mm-hmm.
But some of it just happens. People are satisfied with the service they had, or very satisfied, and they'll send people to me. Also, because there are, as I said earlier, a lot of people moving in here from the university. People who are in a position of influence, like chairmen of departments and deans that I've done their loan, will send people who are moving here to me.
So you get a lot of referral business then. Mm-hmm. Of course, you've been around a while, and then I would expect that.
Right, and I also, having worked for the other bank that I did, I just know a lot of people. And they'll call me to try to get a quote at least on a rate and that sort of stuff.
Mm-hmm. Do you pick up any realtor business at all?
I have some. I have. I don't know. I'd say probably 20% comes from direct realtor referrals.
Is it because you work the realtors, or it's just kind of taken place by osmosis over the years?
Sort of. It's much like moving from the lots to the builders. It's sort of because I started out with a customer that was a customer of the bank, or one of my former customers at the other bank that I worked for, and then I sort of met that realtor, and they were happy with the service that I gave. And I'm very direct and very blunt, and I prefer direct. Some people say blunt, but
we can edit that out.
And also, if there is a problem, I just as soon nip it in the bud, and just say, I don't think we can do it. Let's get them over to today's broker, and see if they can find a loan in Montana that these people might be able to get, because I can't help them. And even though they may not end up doing the loan with me, at least I give them the straight story, and I will stick. That is my story. I will give them the straight story every time.
Mm-hmm. Well, I think there's nothing worse in this business, and other interviews we've kind of beaten it to death, so I won't spend a lot of time on it, but there really is nothing worse in this business than trying to fudge a client or a realtor or BS them in some way, and it always comes back to haunt you in a big way, and it has it has repercussions far beyond that incident, under the theory that your last loan is the, you stand or fall on your last loan in that business. And
one loan is not worth an entire career to me. It's just not worth it. I would rather just let's get it to somebody who can help them, and then I'll help the next customer. There's too many good deals out there to while you're working on this one crazy thing, let's just get that one out of the way so you can focus on the good stuff.
Where do you see yourself headed in the next 3 to 4 years? Any particular areas that you would like to get into?
My marketing focus is something that you touched on, but I haven't really. I would like to work on this a great deal, and that is to leverage those existing customers a little bit more. I want to continue doing what I'm doing, but this area has been a very high growth area, and we're starting to have a political shift in that smart growth is becoming more of an issue, and we may not see as many building permits and that sort of stuff in the future. So I'm going to have to shift a little bit to regular purchases, existing housing, and that sort of stuff. So I need to leverage those existing customers into referrals. And
I'm sorry, I didn't mean to interrupt.
Well, and I'm working on how to do that. But I can see myself continuing to do this job for some time, probably, at least 5 years, at least.
Well, it's interesting you were talking about smart growth. That's an area that, for our listeners out there, is becoming very big politically and politically charged in some states. I say that having lived in Virginia most of my life, and only recently, the last year and a half, moved down to the Lower Eastern Shore, which is very conservative down here. They never saw a liberal they liked, and we have a very liberal governor by the name of Glenn Denning, who has instituted and is really in the forefront in the country of what are called smart growth policies. And what you're alluding to, and a lot of states are now picking up on it. He's going to be head of the governor's conference for next year. And that really is a way to control growth where the state essentially steps in and says, if it's outside of the normal areas that we consider to be growth areas, we will not provide any infrastructure, we will not build roads, sewers, we will not support you in any way. And he has had some success with that in driving the areas that they, driving building to areas that they want to see growth in. Of course, there's a flip side, is what you just alluded to. Also means there's a lot of areas that aren't going to get the support in the future.
We're seeing that already in the area that I mentioned. Cary, North Carolina, started out about 10 years ago at about 9,000 people. Now it has 80,000 people. And
Boy, that's huge.
They have really shut down the building permits there. And so loan officers there are beating the bushes is an understatement. I mean, it's very, very competitive there because there's just not enough new homes. There's not enough inventory. But we're not to that point yet, but I do, you kind of see that little cloud on the horizon and hope that it will go away.
Well, up in the Washington metropolitan area, at this particular point in time, they have sometimes 4, 5, 6 contracts coming in on a deal, and people that are pre-qualified just stuck in drawers, they're fully qualified, pre-qualified, and there's just nothing out there for them to buy.
We're seeing that to some extent, but it's not quite like that yet.
Right, exactly. Well, maybe with some of the recent moves by the Fed, that will take care of itself, and slow it down. Well, look, I think we're running out of time. I wanted to thank you very much for taking your time to talk to our listeners. I think your points are very valid, and you're also in an area that is an area that a lot of loan officers out there, I think, neglect, primarily because they don't understand the business and what's necessary to get in it. But obviously, it's a very lucrative side of the business, and it does require a lot of experience, a lot of product knowledge, which I think scares a lot of people off. But for those that persevere and learn the trade, it can be very lucrative, as you've proved. So anyway, I want to thank you very much, Cynthia, and have a nice day.
Thank